If you get one of these loan authorization agreements, you need to read it at least 4 times before you even put a pen in your hand or click on the DocuSign link. You need to read it because this is a serious deal, and I don't think it is anywhere really near what people were expecting when they heard it was available. And I think that it could really hurt some businesses and people personally in the long run, or even sooner than that. Shared video, joint video, my first video, Entrepreroofer. Everybody wants to know where the money's at. And I haven't actually seen much on this. The big talk is the PPP, the Paycheck Protection Program. That's the big one, especially I think because it is a forgivable loan if you meet certain criteria. But the EIDL, which is the Economic Injury Disaster Loan, I think. It's either income or injury. I can't remember. But it's the EIDL. And nobody's really talking about that one that much, which is, what kind of prompted me to even bring this up, because we have been offered that as a business. Our business was offered this EIDL loan. And with it came the loan authorization and agreement.
How much did we get approved for?
We got approved for $161,000.
Okay. How long did that take?
This took probably a little under 30 days. I don't have the numbers pulled up in front of me, but I'd say it was a little under 30 days from application to receiving loan documents to sign, accept, and ultimately start disbursement. We were probably one of the first to, when our state, Georgia, was declared eligible for the EIDL, we immediately applied. So we didn't waste any time. And this was with the original system that was really slow and really sluggish and bogged down before they switched to a different system which required less information. And then they started up the old system again. I think you had to mail stuff in or something. It's really confusing. Don't forget to smash that like button.
Destroy it.
I feel like we need to come up with something different than that, because I do appreciate what Graham Stephan did, and actually laugh at it every single time. And the timing of it makes it even better. But I'm not expecting it, and then he does, and then I do smash it. Because I wasn't thinking about it before that.
And if you dislike this video, make sure you hit that dislike button twice.
Double dislike. It really helps out with the YouTube algorithm.
It really does.
I don't know anything about those, but apparently it helps. But I think we should come up with something different, because I don't know if you saw the one I sent you today, but this one guy, he kind of copied Graham like to a T.
Oh God!
I mean, he even had like the little plant on his desk and everything. He had a plant on his desk, and he had the name tag that said, it didn't say do epic shit, but it said, and then you have to bleep that out. You're not supposed to curse on here anymore. So, but he had a name tag that said something. It's just like, really? And he's talking about like finances, like in real estate, and
blatant copy.
So
at least change niches if you're gonna write them.
I mean, but if you're gonna copy somebody, you copy somebody great. So it's a smart thing to do. But I feel like there's still a slight chance for some originality. Today.
Definitely.
So that's my intro, Entrepreroofer.
Ron Yates here. Let's talk money.
You want to talk money?
We can talk anything.
But all this talking has made my coffee go cold, and it's disgusting.
My coffee is quite cold as well, but whatever.
All right, but we have a copy of this loan authorization agreement, and because not many people are talking about it, I just wanted to put it out there and maybe give some people a heads up about what they could possibly be getting into with this EIDL that they are waiting on. I couldn't. I mean, this was just like a quick search. I didn't really find this information on the internet. So, it's kind of eye-opening now that I have it. And there are, a few things that I'd like to point out that people may want to take into consideration. And ultimately what we'll have to do is we'll have to make another video to really go into in depth on each one of these topics. But, the EIDL there was one of the perks to this loan was the fact that there was no personal guarantee required. So it's a loan for your business, essentially your small business, but you don't have to back it personally. Which, if you run a small business, you know exactly what I'm talking about. It's cool that you have a business and an EIN, but you're on the hook, pretty much.
Yeah.
So the cool thing about this was it didn't require a personal guarantee. However, now that I have this, in my hand, there's something on here called, I don't know if you can see it, but it says collateral. Now, this is page 2 of it. Collateral. You don't necessarily have to personally guarantee this loan. However, if your loan amount is greater than $25,000, they're going to back this loan, or at least secure this loan with collateral. And just a real quick rundown, that can include inventory, equipment, instruments, including promissory notes, chattel paper, I don't really know what that is, including tangible chattel paper versus intangible chattel paper, and electronic chattel paper versus analog chattel paper. I'm making all this up. Documents, letter of credit rights, accounts, including healthcare, insurance receivables, and credit card receivables, deposit accounts, commercial tort claims, general intangibles, including payment intangibles and software, as extracted collateral as such terms. This is getting so legal, I don't even know what I'm saying anymore. So, but ultimately, what it really boils down to is, your inventory, which, you would assume your inventory is going to be what makes you money. And your equipment also is going to make you money. And let's just sum this up to any money owed to you. They're including in the category of collateral. Now, this was never really mentioned before in applying. It was, hey, it's no personal guarantee up to $2 million. Maybe if you've done, applied and maybe even received SBA loans in the past, you are familiar with this. Maybe this is normal. We have not. So this was a new one to us and kind of eye-opening, because the last thing you want to do is further put your business at risk with a program that's supposed to help minimize your business risk right now by giving you access to working capital. So that's one, and we can go into greater detail on that in the next video. Another that is that jumped out to me. There really should be no issue with the requirements for the use of loan proceeds, which ultimately are for payroll, rent, lease payments, basic overhead operating costs that that have been affected by the disaster, the pandemic, yes. So shouldn't be any real surprise there, so basically what I'm saying is, if you're applying and you're interested, make sure that you are going to use this for its intended purposes and you need it. Otherwise, as you get to I don't know, page 18, as you get into this document, you'll see that could really come back to hurt you if you so choose to inappropriately use the funds.
Initially, when the term no personal guarantee was mentioned, I think that line alone allowed many people to just think, oh wow, this is risk-free money. And what we're finding is that after having been approved, it's far from risk-free, and you're
risk-filled.
Yeah, it's risk-filled money, and it's kind of like if you sign at the dotted line, you are basically you're just about making allowing the government to become a partner in your business if you accept these terms. I mean, what I was reading was you have to get approval just to.
It's funny you say that, because a partner would actually probably be more along the lines of someone who's actually going to help you. And the way that this is written, this doesn't really seem like a partnership that I would want to be involved with, because they're going to help you, so to speak, by putting funds in your account, but that's pretty much where the help stops, and that help may actually hurt you. There are, there's certain insurance you have to maintain and carry for this loan, which most businesses probably have and will continue to have as long as they can operate. But besides that, books and records. And, some companies do really well at keeping their books and their records, maybe even outsourcing it or having an in-house CFO, a really good CPA, bookkeeper, a system in place to really keep up with it. But I can only imagine the books and records that the SBA is going to want to see to verify that the use of the funds were in line with the agreement. And with that being said, the SBA is requiring the most recent 5 years that you must maintain up to 3 years after. So let's just say you get this loan today, tomorrow, Monday. I don't know when this video is going to be uploaded, but let's just say you get this loan May 1st, 2020. Your payment doesn't actually begin until the following year, 2021. You're keeping up with it. You're doing, really good record keeping. Things are a little bit slower probably, so you're able to track more of what's going on. You may have fewer transactions at that, so it's fine. You can keep up with it. But let's just say so most recent 5 years. So let's just jump ahead to 2025. So there's a cutoff, but it's 5 years, the most recent 5 years. So at the end of this term, which is a 30-year term, you would have to keep the last 5 of those 30 years at least 33 years. And, after the date of maturity. But with that being said, let's go back, rewind. 2025 rolls around and the SBA says, hey, you remember that EIDL loan that we gave you 5 years ago? And you're like, yeah, sure. Yeah, we're going to need to see all your receipts and contracts and subcontracts and insurance and lease agreements and, you sold an asset? Yeah, we're going to need to see the sale, the bill of sale. We're going to need to see where those funds went. You moved? Okay, yeah, we're going to need to see every expense related to that move, and we're going to need to see where we approved that move, because that's part of this agreement, is that the SBA you have to have written consent and approval from them for certain business activities that you would normally do on your own without consulting anyone, unless you had multiple members or partners or whatever. But the SBA, now that you have their money, they have to approve it. So hopefully you keep up with that for the next 30 years, depending on how long you keep it. I don't recommend keeping it for 30 years if you can help it. But you have to maintain these records You know, so just imagine whoever's maintaining the records no longer works for you, or you lose a hard drive, or you lose misplace some files on a move. This could be bad.
Yeah, and you know, when let's talk about that for a second. This could be bad. What does bad really look like?
Bad, you're skipping ahead here, but let me tell you what bad looks like. And bad looks like a default. And, you know, a default is not good really ever, no matter how you look at it. However, in this particular default, they have the right to actually come after. I don't want to say come after you because it sounds like so aggressive and angry and mean, but basically they can request up to 1.5 times the disbursement.
So what you're saying is, hypothetically, let's say you get $100,000 loan, they could say, "Oh, you didn't follow all the rules. You don't have all the records and documentation." They could request 150,000
Immediately.
due immediately.
Immediately.
Is that in the document?
Yeah, I have to get to it. It's in here somewhere.
Oh wow.
But let's make it actually a little bit worse, because this is advertised, you know, all the perks of it, up to $2 million, no personal guarantee. I wish we had a business that required a $2 million loan. We do not. The amount that we were offered is definitely an amount that would help our business during this time and for the foreseeable future until we think things may get back to normal. But if you were in that position where you were offered a $2 million loan, I can only imagine what your business looks like. And if you're in a sector where you're actually not really working, then that could be really bad. But let's do 1.5 times 2 million. Yeah.
Yeah. So you're on the hook for $1 million over what you requested.
Yeah. Yeah. So again, we'll touch more on the requirements and the recording and the record keeping and the bookkeeping. We'll touch more on that in another video. There's 19 pages here, so it's going to take. I think it may take every bit of 2 months to really go through this and try to figure out if this is a good idea or not. And you really have to weigh it out on your own for your business. You know, what's worse? What is worse? Trying to get through this on your own, trying to get through this through other options and other avenues, because they do exist. Don't think that EIDL and a grant
assistance
and the PPP is the only way. There are other ways. Now, they may not necessarily be easy, or screaming at you like, "Hey, here we are," because, you know, banks, if I were a bank right now, I would be, you know, kind of gun shy. But there are other ways. So
and actually, maybe on the next video, maybe we should cover what some of those alternative ways are that no one's really talking about. Because right now, everyone thinks it's EIDL, it's federal loans, and
we will. You know, it's really, hindsight is 20/20. But this should be eye-opening for everyone to prepare themselves for the worst and or the unknown, because in a situation like this, a time like this, and you can see it, you saw it day one on the news. If you weren't a pre-existing, or day one when these became available, when these options became really available to apply, if you weren't an existing account holder with these banks, they're not talking to you. And then if you didn't actually owe them money, they really weren't talking to you. But it is definitely in everyone's best interest to have a relationship with your banker, banks, credit unions, prior to needing their assistance. And their assistance may not be money. It may not. It's not always capital. Their assistance could be a referral, or, you know, a contact, or, you know, a deferment or forbearance. It could be a modification. It could be a number of things. So it's really good to have that relationship before you need them. You know, fortunately, or maybe fortunately for your business, at this time, you weren't in these positions where you had loans. Maybe you have, that is always good. But having that relationship, to have a conversation, to accept an application, to get answers to questions, because when this started, their phones are ringing. The phones are ringing off the hook. You can't go into the branch and talk to them like you used to. I mean, this is a unique situation. So it's really good personally and on the business side to be prepared for the future down the road, the what ifs, the rainy days, and also have the relationships and build relationships. Not necessarily because you want something or you need something, but it's just you just never know who you may need to talk to in the future, and the conversation, or at least the availability of having the conversation, may only exist if you had the previous relationship. Additionally, if the banker, financial institution knows your business, it makes things a little bit more. If you have, if they know your business and it's a good business, or even if it's not necessarily good, I don't want to say it's bad, but they kind of know your business. It's not just like, hey, here's the file, and I know it looks bad, but we need money. No, they're like, well, yeah, we understand. We've been going over this for the last 2 years. We see where you're going. You have potential for success here. So it just changes things.
And it goes a long way, I think, more so with the smaller banks rather than some of the larger ones. What do you think about that?
Yeah, that's a tough one. But it's definitely good to have, I would say now, multiple banks. Multiple banks. I would say it's good to have multiple banks, multiple people that you can call on, rely on, lean on. Just because you can see, even if you had Bank of America, they started off strong, accepting PPP applications. JP Morgan Chase has been out there. I think they were delayed a couple days, but they've been dispersing funds. Meanwhile, Wells Fargo was late to the game. Multiple reasons why, and we don't need to discuss them right now, but they were late to the game. So if you had a relationship with just one bank and it wasn't one of the ones that were really doing something, then your relationship really didn't matter. Some of the smaller banks, this is a completely new territory for them, trying to process SBA loan applications and the volume that they have.
Oh yeah.
So it's tough. It's tough, but it's it's like, I guess, somewhat like a Swiss Army knife. You have so many different tools there that you can use, but you just don't know which one you're going to need until you need it. So I would recommend, and this is something, my advice I have to take for myself is to have relationships with multiple banks. Small banks are good, more personal, but even still, unfortunately, sometimes you do that, and then the small bank doesn't make it, or the small bank gets bought out by a bigger bank, and then it's just like, now you're just another number.
That's a good point.
Yeah, I look at the banks by their account numbers. So I think Bank of America is a 12-digit account number, maybe more. Where one of the smaller banks I was dealing with at the time had a 5-digit account number.
Gotcha.
So you can kind of see how you would fall in the mix there. Let's see here. All right, so we are short on time, so we're going to have to stop there. I'm just going to leave off with one last topic, or at least bullet point or line item in this agreement, which is basically the distribution of the funds, which there are some restrictions there as far as distribution goes that you may be able to work around, but you would need the SBA's approval to do so. And this could affect your employees. This could affect you, depending on how you pay yourself as a business owner. It could have some serious side effects to, just your livelihood, and trying to maintain your household while operating the business. So we'll have to get back to that next time. I'm not sure when that's going to be. Hopefully soon. We got 2 months to go through this, so I definitely think we'll get it done by then. But in the meantime, we'll continue to try to bring you more information on this, more information on the programs available through the government, through SBA, and just through the banks in general, and just other businesses and institutions that can help during this time, because we're going through it too as a small business, and just as people.
Yeah.
So we'll try to bring more as more comes to us, and we do our homework on it and educate ourselves on it and try to understand it, because you just don't want to run out there and take whatever's offered to you without really understanding everything about it as best you can, only to find out it's not quite what you thought it was going to be, and now you're in more trouble than you were before.
Right.
I'm not gonna say it's like taking money from the mob, but
some of the terms make you it's kind of close. Makes me think it's kind of close.
Yeah, I mean, and then there's a timeline on it. You get it, you need it. You're like, I'll just sign it and send it in. If you get one of these loan authorization agreements, you need to read it at least 4 times before you even put a pen in your hand or click on the DocuSign link. You need to read it. Like, save it, download it. It'll let you download it, print it, and read it over and over again. Maybe talk to your attorney if you have one. Talk to your banker. Talk to your CPA. Talk to maybe some other business owners that because this is a serious deal, and I don't think it is anywhere really near what people were expecting when they heard it was available. And I think that it could really hurt some businesses and people personally in the long run, or even sooner than that. Even though it says it's a 30-year maturity with a 1-year deferral on your first payment, it could hurt.
Yeah.
Something that you just can't come back from. So anyway,
and let's not just assume that it's 30 years and they're not going to check on you between now and 30 years from now. I'll bet that there'll be some sort of audit, or some kind of peeking in and asking for some sort of maybe bookkeeping update.
Oh yeah.
Asset verification, things like that.
Yeah,
and on-site visits.
And the time frame to get this information back to them is very short. We'll have to go into that next time. But when they ask for it, they're expecting it not when you can get to it.
Yeah.
Like, they're expecting it like right now.
Yeah.
And we'll go into that next.
Yeah.
Or on an upcoming video. But I would also strongly recommend that if you are considering this and you do go down that road, please try to develop a plan where you don't need this for 30 years. And it's going to require some creative thinking and some changes in your business plan, business model maybe. But I would really, even though it's a low rate, it's a low rate for a loan that you don't have to personally guarantee. But it's not 100% unsecured, so don't get that misconstrued. There is collateral here. Yeah. But I would, really recommend you find a way to pay this back as soon as possible. And we can do an amortization schedule next. But just over the life of the loan, this would be a considerable amount of money in interest to repay just to hang on to it for 30 years, especially if you don't need it. So, that being said, thanks for watching. Hit the like button, subscribe, notifications, comment. We'd love to hear what you had to say.
Speaking of comments, if you guys are applying for this, or if you already have applied for this, if you have any questions, we've been approved for this loan already. We're already kind of on the inside. We're starting to see what's not being covered on CNBC and on the news, on mass media. So we're kind of getting in the weeds here. And if you have any questions, we'd love to cover them. maybe you'll be sharing something with us that we didn't even consider, and so we would personally appreciate that. So, you know, if you guys have any questions, comments, suggestions, drop them in the comments below.
Yeah. Do that. And we'll holler at you next time.
See you guys.